that is the goal of this episode. That is,
Yeah.
platforms will exhibit platform behavior before they get strategic investment. Welcome back to the Inorganic Podcast. My name's Christian Hassold.
I'm Ayelet Shipley.
And we are your friends in M&A. We've got a really special guest for you on this episode. It's actually our first guest together, so prime de la prime. Our good friend Anthony Costanzo is with us, and we are going to talk today about becoming a platform. Why are we going to talk about becoming a platform? What Anthony does in his everyday life, he sheds blood, sweat, and tears to help identify, source, and bring into the M&A funnel potential acquisitions, in part for some strategic clients as well as those becoming a platform. So we've got a great expert witness here today to talk about what does it really mean to become a platform. Before we get into the content, Anthony, would love for you to give us a little bit of your background. Like, what have you been doing the past few years? How did you get into this game? Share with our audience.
Yeah. First, thank you both so much for having me. I feel honored to be the first guest getting interviewed by the two of you. It's pretty special position. So I started my career in finance, selling consumer equity research. Then I moved into more macro and portfolio strategy type of research, always working with really large institutional investors. Pretty special type of work, really taught me how to quickly take a lot of very complex information, live information happening in the economy and in the markets, analyze it, distill it, frame it for different types of investors, whether it be someone more growthy, more value oriented, and really tailor the story for each of those types of investors. After Wall Street, I decided to stretch my entrepreneurial wings a little bit. I stepped out for a while to co-found a tech platform that was specialized in the entertainment industry. Really great experience. Led me to believe that building stuff is really my passion. It's really what I love to do. And then finally, I had an opportunity to go from there to building out the buy-side practice of a boutique investment bank here in New York that specialized in the marketing services space. And I essentially took that practice out on my own to launch Stanzo, which is a buy-side advisory where we still specialize in digital marketing, media, communications, tech-enabled services firms. Again, staying really pure to the buy-side advisory work, helping, as you mentioned, Christian, investors build platforms from scratch, source, acquire add-on acquisitions, and help build long-term value creation for both the founding teams and the investor groups.
Very cool. How does your background, and you were an entrepreneur, you like to build stuff, how does that then translate into like really going into the M&A space and building out a buy-side practice?
Yeah, it's interesting. I having not really worked in investment banking or a traditional investment banking background, I got to start from scratch with no preconceived notions of what this process should look like. So I took a very practical, iterative approach to saying, all right, what is the problem set here that we're trying to solve? And then how do we iterate on it and build it so it's something that works? And that gave me a lot of latitude to build my process in a way that when I talk to a lot of investors and a lot of my clients, they all say, you do this pretty differently than a lot of people we talk to. And it's been working, so I'm continuing to do it in that very differentiated way. And I think there's a few points. There's a natural alignment that I have found with the founders that I get to talk to, in that we're both builders. We're very similarly minded about creating things. And I think that comes across pretty purely when people talk to me. They see me as someone more like a peer than as a lot of people, you'll probably relate to this in our industry, joke, I'm not a suit, so to speak. I'm not this, person sitting across the aisle from them in a tie who's trying to sell them a bale of goods. I'm just another person who likes to build stuff, trying to understand their story, what drives them, what they're building, and ultimately where they want to go. And I think that's what's really important. And founders, I can relate to that with a lot of founders.
Yeah, I love that. It's like, it's always that, psychology, human connection, understanding, but like truly understanding both their mind and their business from this builder point to understand where it's going, where it needs to be, and then helping to fit the pieces of the puzzle, right? Which ends up becoming usually that transaction side of things.
Yeah, exactly. Understanding, empathy, I think, is it's very commonly used these days in a lot of places. People like to say, we're very empathetic, but so it's a little cliche for me to use this analogy, but it really is about empathy. You have to understand what a founder wants. Every founder has had a different vision when they set out to build their business. Some people have 5 businesses. Some people build a business to sell. Some people build a business to run as a lifestyle business. And each of those different cohorts are going to have different wants, desires, end goals, and also fit into different potential scenarios with different types of investors. They're not going to align with every investor, which is something maybe we'll get into a little bit later. But I completely agree. You have to really listen and understand the founder's vision and perspective and get to know them as a human.
That's the magic that we do here.
It is.
Okay, so we're already getting kind of into the meat of things. And I think that everyone listening, and Christian and I hear this classic question all the time. And it's like, well, could I be a platform? And I'm sure you get it all the time too. So why don't we just, in your opinion, in your mind, and what you experience on the day to day, define what a platform really means?
Yeah. So it is something that comes up a lot. And a platform, in my mind, is, maybe this is a very generic definition, but it's the initial investment in a company that will then serve as the foundation for a broader investment strategy or theme that an investment group or a private equity group is looking to execute. So it's the starting point. And I think that, there are obviously very important attributes that, think about a building. A foundation has to have certain attributes to be strong, to be built on top of. That's across the team, that's across the client base, that's across the processes. But it's that initial investment that the private equity group or investors make.
And why is it so different or critical compared to, potentially a later add-on, right? I mean, I know it's the base foundation, but like more than that, what's so critical about it?
Yeah. So when you think about building a platform, knowing that the strategy going forward is going to be to help the platform. Well, taking a step back. What is the goal? The goal is to invest in a platform, build it into something bigger, and then presumably sell it to another buyer down the road to create a return for the investors of the private equity group. So in order to do that, you need to find something that, first and foremost, is of a certain size, presumably. So a lot of private equity groups will sort of use 2 million in EBITDA as a good starting foundation. And if you back into thinking about what a business that has achieved 2 million in EBITDA looks like, you can start to unpack why that's a good starting point. So for example, reaching 2 million in EBITDA, you probably have a pretty strong management team that has a clear vision about where they want to take the business and where they want to go with it. Other key features of a good platform, you look for a strong margin profile, maybe best in category, best in class. They're running the business efficiently. Solid fundamentals. You want to see good client diversification, ideally not any concentration.
What's your concentration threshold?
Yeah, I think, that's a great question. A lot of numbers get thrown around. I think the most perfect scenario is no client making up more than 10% of revenue. But I think it depends that, you can start to turn the dials up or down as you look for platforms. Maybe the management team is so strong, or they've got a really great growth pipeline that'll be diversified over a bit of time, and you can kind of look through that in a shorter window. But I'd say 10% is a pretty good, would be a perfect scenario to look for.
That's a pretty tall order.
It's a tall order. Yeah, you don't always find 10%. I'd say more commonly, we're going to be finding a couple of clients that are 15 or 20% of revenue. Very common. And again, very navigable. I think understanding those relationships, how those engagements are set up, how long they've been a client, those are all important factors that would play into, whether or not it's a good investment. But yeah, I think 10 to 20%, let's say, we'll give people a little
It's
leeway.
not a disqualifier, right? If it's a little bit more, but it's about understanding kind of the intricacies of it. But in an ideal setting, right? If the stars were to align, right, that's what it would be. You said
Yeah.
you said management team really strong. Tell me more about that, because everyone's like, I have a strong management team, right? So what does that actually look and feel like?
Yeah, strong management team there's a lot to unpack there, but I'll try to do it pretty succinctly. I think finding a management team that has first a good amount of tenure, so they've been doing it for a while, but not too long. You're not at the end of your career. You're kind of in your middle, probably. You're grown up enough to know what's good and what's bad and where to want to go in the future. Gas in the tank, really important. So having founders that are still really ambitious, have a bigger vision, have goals of where they want to be in the next 3-5+ years, that's something you look for. And I think that also dovetails into the future strategic alignment with the investment. Having somebody that wants to stick around and be part of that ride with a private equity group, knowing that they're going to have to be starting to divide up their time a bit more, looking for add-on acquisitions or being involved in the add-on acquisition process later while still running a business. It's a lot. It's a lot to handle.
Yeah.
And getting back to that 2 million in EBITDA figure, you'd hope at that point that's usually a good position for an agency or a team to have put in the right leadership underneath the CEO and underneath the C-suite. So you've got kind
Interesting that you said 2 EBITDA. So I feel like that was originally a threshold. And then I feel like in the most recent years, and maybe Christian, you can speak to this a little bit more. I feel like it's gone up from 2 EBITDA as a platform. Is it, are we thinking about different buyers, or Christian, how do you think about that?
Yeah, I mean, look, what does 2 million EBITDA mean? Is that before or after add backs? Is that after your quality of earnings, proves it out? I think that 2 million EBITDA in this day is a little bit too low of a bar, because too many things can go sideways and evaporate a good amount of that EBITDA. So I tend to think that your kind of the real floor is more of the 3 to 4 million range, where there's, remember, EBITDA is gasoline for investors to lever in order to make further investment. And you need that gas tank to consistently be full and kind of meeting the lever ratio with the debtors who are, or the investors who are ultimately underwriting. Like, they may underwrite with some equity, but then they'll want to get some debt going in order to do some add-on work. That's usually how this works. And so you need that EBITDA in order to lever it. And EBITDA, by the way, is also the way in which we measure the value of the business. Most of these deals are valued on a multiple of EBITDA. So you want strength in that EBITDA so it can trade out later. So I'm a bit more of like the 3 to 4 million kind of minimum bar. But there is this important kind of sub-bullet to this is, not all investors are alike. There are investors with 250 million capital under management, 500 million, who are professional investors, but I wouldn't say are like highly experienced private equity investors who have been in this space for a long time. So I kind of treat them like speculators in a way, that they really like this area, they want to invest, but they don't really have a lot of experience in it. So when you, as the founder, and this could be something we talk about a little bit later, are picking a partner, you want to be thinking about partners who have deep experience and knowledge and expertise operating in this space, and sort of know what the road ahead is for the founder and the platform.
Yeah, and I totally agree. So just to be really clear, 2 million is like the drop dead floor probably. So 3 to 4, 5 is ideal. I completely agree with what you're saying. And I think also just one other point that I think is important when thinking about, a platform from the investor side, you're looking for a business that is also consistently growing, has been through different growth stages. 0 to 10 employees is going to be a certain set of challenges and obstacles. 10 to 20, 20 to 40, 40 to 80. Those are all different challenges for the founder to grow through and for the business to grow through. You have to improve your systems and your team. You need to start adding HR. And there's all these different things that start to occur as you grow and become larger. And so achieving platform status, so to speak, means that you have demonstrated the right to be a platform. You've built your business in a way that you've earned the ability to be a platform. And I think also an important feature to just throw in quickly is that you're typically, as the founding team, going to be investing alongside of the private equity group in the platform. And not to go too deep down this rabbit hole, but when deal structures start to occur with platforms, like a lot of other deals, there's a portion of cash, but there's also an expectation of rolling a significant amount of equity so that you're shoulder to shoulder
Skin in the
with
game.
skin in the
Skin
game,
in the
baby. You have to
game.
have it. And it keeps everybody aligned and, wanting to row and grow in the right direction together.
Yeah, I think we're talking about sort of the characteristics of the business, but I think what is also really important is the characteristics of the founder or of the leadership of the platform. Maybe, Anthony, you could talk about, in your experience, what are highly successful traits of agency owners, CEOs, co-founders that make attractive platform leaders.
Yeah. So, particularly in this space, being very human capital based business oriented, strong leadership is one of the most important features. Being somebody who is very entrepreneurial, a visionary, but also human enough to know how to take care of their team properly are all very important features. And you can look at those features over a cup of coffee with somebody, maybe as one layer. But then secondarily, when you get deeper into learning about the business, understanding if that founder or CEO is also reflecting those traits across the way they're running their team. Meaning things you like to look for that would be good signals. Has the founder given a portion of equity to key leadership people? Are they incentivizing the team in a certain way or in a right way? How much autonomy and trust do they have in their leadership team? How involved in the day-to-day and in the client engagement specifically is the founder still playing a role? I think those are also traits, to double back to your original question, that are reflected in a strong person, individual leader who has been able to allow their team to take the reins of a business that they themselves originally started. It's kind of like handing your baby over to your team. Do you trust them? Have you put them in a position to be successful? And can you step back and let them do the job? That's a hard thing for some founders, and not all founders are good at that.
I want to
So,
double click on that word too, baby, right? Like when someone refers to their business as their baby, it almost is a sign to me that they're not ready to be a
yeah,
platform too, because they haven't made that step into like being able to hand a significant amount of trust into their team, right? And have those multiple layers of management in there that, it's not all heavy on them, right? As the founder, right? So the more we don't refer to, selling their baby, right? The more of a sign for me it goes off of a little trigger.
The number one trait of a great platform leader, in my experience, and this is whether you're building a $50-100 million SaaS company or whether you're building an agency, is really strong conviction about what you're doing and why you're doing it and who it is for. Really strong conviction. And the other thing is, generally they make a very early bet to bring on one or two other keys. Usually one of those two other keys are significant complements to gaps that the leader knows that they can't do. That might be a chief operating officer, because you need somebody who is operationally savvy. A lot of really good CEOs are not operationally savvy. They're visionaries. Another typical weakness of a CEO, that's a gap in capability, is being a financial housekeeper and bringing on a CFO really early, or a VP of finance who's really keeping the house in order. You see those three pieces, for me, those are really, loud traits of I'm capable of taking this to the next level and running the ship beyond 5-10 million in revenue.
Yeah, open to learning, working collaboratively with others. I think that essentially what you're describing. Those are also incredibly important features when you start working with an investor. So those are earmarks that I look for as well. How is this person going to work with a partner who has more experience now in this second phase or second leg of the journey of this business? Will they be open to feedback? How will they collaborate with others going forward? Ultimately, in the best interest of the bigger business, which has now expanded its stakeholder base essentially through an investment partner, and sort of put their ego aside, be egoless, so to speak, in the process. It's really important.
I think that really starts to go into now like the investor founder relationship, right? When you go into building a platform, right? And then you're finding the right investor to do so, or the investor's finding the right platform to invest in. Talk to me about the different types of investors and how that translates into what someone is building.
Yeah. I guess I break it into a couple of buckets, but there are the investors who are maybe just high level first. Investors are there to lend advice, insight, see around corners, see around what the future is going to look like as the business looks to grow into new phases or stages that they've never been before. So there's a lot of value that the investor can provide to the platform in that sense. I think the other big key piece of value is obviously the capital infrastructure for add-on acquisitions, for additional growth, operational savvy, operational efficiency, integration support for future acquisitions. I think you see some investors who are pretty hands off, candidly, about a lot of these investments or opportunities. They will step back and say, look, we don't know how to run your business the way you do. You're the expert at running a digital marketing agency, but we're really good at the banking side of it. We're really good at the support and infrastructure side and supplying you with the resources you're going to need to grow. And so there becomes this symbiotic relationship that the two parts can provide the whole, and they work well together. Now, the other one that I think is a little bit of a different type of relationship, and there's certain private equity groups that have really, really deep industry expertise or knowledge. And those are the ones that tend to be a bit more hands-on with the management team, a bit more hands-on with the day-to-day operations. They're going to be more involved, and they're going to be able to also lend a level of expertise and knowledge that's going to be different than that first investor. So to sort of parse that out really very quickly, maybe on the one hand, the first example, you're going to have to find a platform that has a leadership team that's really, really strong. Maybe a management team that's a little bit more experienced on their own, really has a very clear vision about where they want to go in the future. And they've demonstrated that to the private equity group. And they need less support, perhaps, from that PE group on vision and strategy. They just need more maybe infrastructural support. But the latter might be someone who's a little bit less experienced and might need a little bit more help on the vision and the future. And they lean on that private equity group's experience to help formulate and execute that. It's not always that clean and perfect, but something to that effect could be out there.
Something that sounds important to me when founders are potentially listening to this is knowing really who you are and where your strengths and weaknesses are and what you want for your future. Because either of those two are okay, right? Because there is the right lid to every pot, but understanding that and then choosing the right path to go down, because you don't want to go into having the wrong investor. Right? I mean, it happens. We've all seen it happen. But as the platform, like, they're betting on you too. You're betting on them, but they're betting on you, right? It's a lot of trust, a lot of negotiation, but you got to know who you are to be able to make that decision correctly.
Not all investors are equal. They're not all equal. Most of them are pretty transparent about who they are, what they're trying to do, and what their capabilities are. The better ones, the Mountain Gates of the world, Shamrock, ZMC, which is the sponsor of W Promote, they're very clear about how they want to work with the management team, what resources they have available to help support the founders and the broader company as it's going through growth. The larger they are, they tend to be more polished in their presentation. I think for the audience that we're talking to here, you should know that there's a very, very wide audience of investors. As I mentioned earlier, they can have as little as $250 million in capital under management, especially that sub $2 billion in capital under management tends to be a really, really diverse bunch. And if you're talking to an investor whose AUM, assets under management, are less than $1 billion, like we said at the top, treat it like a dating relationship. Really get to know them, really understand what are their values, what are their tenets, what do they want to get, what is the return that they're looking to get out of the investment, how will we get there? Will they be helping you? Or are you going to be doing all the work? Are they going to be passive? Are they going to be active? If they're active, do they want to be in your executive meetings every week? Do they want to be in the board meetings? What do they want to do in the board meetings? It's very different from one investor to the other. It's really important to build that, I think, alignment. And I think that's part of what we're talking about here is the hard work of building a platform is not just getting the money and identifying the acquisition targets, which is a lot of work. It's also really making sure that the platform as a whole, the investor, the leadership team, and the potential acquisitions that you're bringing along with you, they're all aligned and all rowing towards the same goal and the same objective.
Yeah.
Yeah, no, I couldn't agree more. It's the strategic alignment piece. I mean, especially in the work that I do, and when I start working with a client, my objective is to get to know my buyer, my client, as well as I possibly can, not just from a strategy perspective, but from a personality perspective, because that is ultimately what I have found will allow a lot of the parts, Christian, that you just talked about to come through and to be really clear. So do these people get along well? Are they going to be comfortable sitting around a table making hard decisions together or evaluating hard decisions together and being really open through the exploratory process together about expectations? What's the cadence of our workflow going to look like? And how is that going to change from the way the founder has been running the business day to day currently over the past X number of years?
One random question. If you go back to like the last 10 founders that you spoke to that said, I think I might want to be a platform, how many have you talked out of it and they've acquiesced and said, okay, I'll look at the strategic deal? At least not say they may have completed it, but at least have taken a real serious walk and going through a strategic acquisition process when they started on platform.
Well, some of them are easier than others, not to, throw shade, but sometimes when you get a founder that thinks that they are going to be a platform or want to be a platform today, and their business today is a few million in revenue, a couple 100,000 in EBITDA, you're like, I'm very candid with people, and I will say, look, I understand that's where you want to get to. You're not quite there yet, based on what we've already talked about. I'd say it's the people that want to be platforms typically know they want to be platforms, and they know early that they want to be platforms. So I think there's a level of ambition. You can feel it right when you get on a call with a founder. They know their business super well. They may be a 10-person agency, but they've thought about systems and growth up to the next 50 employees that they're going to hire, and they're so far ahead of where they currently are. That is something you look for, and then you maybe monitor. You monitor that as maybe this person will get to be a platform at some point, but they're not there today. The majority of people, to be quite honest with you, don't want to be platforms.
Why?
And if they say they do?
Yeah.
Even if they say they do, I think that it's hard to talk them out of it. But when you start to get in the weeds, you can see that they may not end up being a good fit for a large portion of the investment group that look at platforms.
Why?
They may not realize that they're not the best platform or ripe to be a platform. But as someone who looks and talks to agencies every day, it tends to be pretty clear who's going to make a good platform and who's going to have a harder time, or who isn't really going to be inevitably built for the process. An agency that is built to be something, built on a foundation that is designed for something significantly larger than they currently are today. That is what
the
you're
guest
looking
is evading my question. I
am evading it a little bit.
You are evading my question.
I don't really want to answer it.
You 10 phone calls you made, you get like to the second call, they tell you they want to be a platform, but by the third or fourth phone call, you're talking about IOI and they're actually engaged in more of a strategic process than a platform process.
Maybe 25%. There's not that. I think the people that want to be platforms know that they want to be them early, and I guess the more common question I get is, am I big enough to be a platform? That's the question I get asked a lot.
Huh.
And I think it skips and misses a lot of the things that we're talking about. And then I try to educate them and say, look, you're either of the right size or you're not, or you have certain features that would be really great as a platform, but you have some other areas that you might want to work on and improve to then achieve becoming a platform down the line. And I think too, people think about, so there's a lot of reasons to become a platform. I think it's not just about wanting to be a platform for the sake of being a platform. I talk to a lot of founders that say, look, I'm at kind of the middle to latter third of my career. I've been doing this for a long time. I own 100% of the business. And I have a great management team that's been with me for a long time that's helped me get here. I would love a liquidity event and to take a journey for the next 5 years or so, given 5 years is approximately the lifespan of what private equity groups will shoot for when they launch and then look to sell later a platform. And the founder says, I want to have an opportunity to reallocate some of my equity to the management team that's helped me get here. Platform acquisition can be a great opportunity to do that. So they put some money in their pocket, you give some equity to the management team, and now together we all grow into the next phase of the business. That's another reason sometimes people want to become a platform.
What is that reality like for them once they do become a platform? Because now they're building their business and the platform, right? It's double, if not triple the efforts. Talk to me about what that's like.
Oh, it's a tremendous amount of work. And that's where, going back to what we started earlier talking about, looking for the qualities of a founder that would make a good leader of a platform or a good platform investment. Incredibly ambitious, understands the amount of work that they're going to have to do, and has a good team underneath them that they can hand the day-to-day reins to so that they can reallocate their time into M&A, into investor conversations. That is paramount to the success of becoming a platform. So I think it also is important because this dovetails into the right private equity partner for different types of platforms. Different private equity groups, different styles of management, different levels of collaboration with the founding team. And that is going to also shape the day-to-day of that founder in different ways. So a more hands-on founder, a more hands-on private equity group, you're going to be working more hand in hand with that group to execute on a mutually agreed upon strategy. And I think these are things that come out really early in the process, well before an LOI is signed, well before you get into purchase agreements and legal documents. These are, as we're using the dating analogy, these are like third and fourth date type of questions where you start to talk about what do we want to be when we grow up? What do we want to grow up into? And finding alignment on that will shape what the day-to-day of the founder and management team look like.
I think there's also the answer you get on the second and third date. And then there's the reality of what happens when you're past that like initial less space and you start bringing everyone in, like your families, and you meet your families and maybe before you're engaged. So before LOI, right? But you have to take into account not just what they're saying, but what are they doing, right? Who are they bringing into the fold, the investors? Who are they bringing into the meetings? Who is the CEO bringing into some of the meetings, like from the management team standpoint, right? You got to look at what people do, not just what they say. But what is like when you say like they're going to be focusing on M&A? Let's say you have a little bit more of a hands-off investor, right? What does kind of that look like? Are they like running the whole process? Are they going and finding the additional add-ons? Or are they just saying, okay, well, we'll interview, right? Tell us, like, for people that are listening, what to expect.
Yeah. My favorite types of engagements, to answer your question, are the ones where the management team is involved in the M&A process, but really our team is the front of the stick. Or the tip of the spear. We've got a really clear understanding of what it is they will want to add to their business, what's going to really drive incremental growth, where are the areas that they need to add resources or expand. And we're out on the front lines looking for those opportunities, vetting them, doing the initial analysis, and driving those conversations and qualifications to a point where then it makes sense to bring in either the private equity group as the next layer of analysis, or maybe it's the CEO, but doing a lot of the upfront work so that they don't have to be in the weeds early on, and getting the conversation to a point where, okay, we know this makes sense to have a deeper dialogue and start taking some time of the CEO to get to know the business. And you just really try, in as someone on the buy side, to control your client or CEO's most valuable resource, which is their time. I love when a CEO is willing and open to be involved very early in conversations. So it might look like, something like, I find somebody that's really interesting. I've vetted them a few times. I think they're a good qualified opportunity. And a CEO's open to getting on a quick 30, 45-minute call just to show a face and just to see if they are picking up the same vibe that I'm picking up, that this is a good fit. I think that shows the prospective target or seller there's good interest. This is a good person on the CEO side. This is someone I could see myself working with. I'm excited about this. And then we decide how much more time we want to spend on it and how quickly we want to escalate the conversation. So a lot about controlling the time.
So we're talking a lot about the kind of the ingredients here and the characteristics. Maybe we should talk about what are real examples of platforms that are out there today. A platform, as we've described throughout this conversation, I think leaves the door open for, there are a lot of different ways that a platform will manifest. So Anthony, top of mind for you, what's like a big platform that you think is a great example of a platform that's live in process right now?
So I actually think Brain Labs is a really interesting example because it encompasses sort of the full life cycle, so to speak, of a platform. So if you think about Brain Labs, it was started by a guy named Daniel Gilbert based in the UK. Funny enough, digging a little deeper, he came from a very entrepreneurial household. Both of his parents were entrepreneurs. He started off his career at Google in 2010, and this really sparked the exposure for him of the intersection of data, language models, advertising. And after about 2 years or 18 months or so, at 26, he said, I'm going to step out and I'm going to go launch this agency called Brain Labs. And he ended up growing the business quite well on his own as a founder. And then in 2019 said, I need some help. I want to take this to the next level. He took some private equity investment from Living Bridge, and together in partnership with them over the following 4 years, they were able to put up 800% growth. They acquired and integrated 8 other agencies. And then to finish the circle a little bit further, in 2023, they said, okay, now it's time to move the business on to another private equity group, Falfurious. And then most recently in July of 25, they made another acquisition of Exferis Media, adding another 50 employees, further enhancing some of their AI-powered full funnel media capabilities, adding some geographic exposure on the West Coast in the US. So I think that's such a cool example because it goes from this young man starting his career at Google and starting the agency from his experience there to the life cycle through 2 private equity groups, a number of acquisitions. It really has all the different pieces that you look for in an interesting platform story that has been thus far quite successful.
I think that Brain Labs example hits the nail right on the head. It looks, according to PitchBook, like they've done 10 deals since 2020. Falfurious is a great example of having a strong PE partner, $3.6 billion under management. They've got dry powder. They have experience in the space. So you've got kind of those key attributes, the right financial sponsor. You've got a team that already showed that it could do M&A before the current sponsor came onto the scene. And you've got that founder with the right sort of culture, the right kind of vibe, the right kind of brand, all coming together. Their most recent acquisition is clearly leaning into media planning, strategy, and buying, which is, an important area for a platform to be in. So I think Brain Labs is a great example of like your typical large-scaled platform. I have an example of an atypical platform that's one of my personal favorites and where I have some personal relationships, and that is Her Campus. Her Campus is I call it like an event experiential community platform that was founded in a dorm room at Harvard back in the, 08, 09 era. And they too exhibited platform behaviors. They've done 6 acquisitions from 2013 up until present, up until their more strategic investment they took on. And those acquisitions are notable and interesting because they weren't like, millions of dollars in capital outlay. There was acquihire. It was a really creative add-ons, really creative structured deals that they've did with, Her Unimedia, the Lala, College Fashionista. They just found pieces that were really like-minded and like-kinded and put them together to create a platform that is a little bit different than a Brain Labs version of a platform. So I really like kind of talking about the diversity of what a platform looks like while we're talking about them.
Is that important, like, for you guys, do you think, to have someone who has experience and has done any transactions prior and who has bought?
Yeah, actually, I'm so glad you brought that up. And Christian, that's such a great point that I kind of forgot. I mean, platforms will exhibit platform behavior before they are platforms. Not always, but you kind of look for that. So in your example, looking at somebody that made an acquihire or a small acquisition early on in their growth phase, maybe they did it completely independently. They did it with either using capital off of the balance sheet or some creative means to complete the acquisition. That's such an interesting feature that I would look at and say, oh man, this is great. You're already exercising and growing that muscle of what it's going to require to become a larger platform. You're demonstrating that you, one, have the strategic vision, the interest, and then finally the ability to get it done. It shows that you have a level of maturity in the business that I think it speaks highly to your potential to become a platform.
That is the goal of this episode.
Yeah.
That is the goal of this episode. Platforms will exhibit platform behavior before they get strategic investment. They will lever their house. They will max out their credit cards. They will go to all ends of the universe to fund the business in their first 1 or 2 acquisitions and get them successfully integrated before they go out and look for capital. Those are some of the most successful ones out there. There is an exception, I think, in that you can have access to capital because you have investment experience. I think ModOp is one of the more modern examples of having a CEO who just knows how to go attract and raise capital, but also do scrappy deals to build that platform. But I can't say it again. Platforms will exhibit platform behavior before getting a giant checkbook. We were talking about founder qualities before. That's one of the qualities. You just figure it out. I think about some of the more recent sort of deals we've seen come into market where a private equity investor, don't want to sound to be like gaslighting anybody, so I won't name names, but the firm has not done any M&A. And what is the hardest part of M&A is successfully integrating, doing the cross-sell and upsell and making it actually work. That is the hardest part. And so if you demonstrate your experience to successfully acquire and integrate into the business, it just gives you as an investor so much more confident that the leadership is going to put your funds to good use.
If you've been in the trenches before and you've gotten to the other side and you've gone through that growth cycle, you can be scrappy, you do scrappy deals, you come out successful, maybe not to the level you want to be, which is why you're going for that next step too. That's the foundation.
I don't know if we need to go anywhere else here.
Yeah, I think that's it.
Platforms will exhibit platform behavior before they become a platform.
It's so true. I mean, as we're talking, I'm trying to boil it down in my head of what does it really mean? What do you look for? If I see a platform that they're a platform before they're labeled a platform, then they're a platform.
Do you see in the market, Anthony, do you get the sense that the growth of platforms is accelerating over the last few years? Is it about the same? Is it decelerating? What is kind of your sense of the market? I don't have a great sense.
My sense is I think there's a rise in the number of platforms. And candidly, I don't have the data to put the numbers behind this, but it feels like there are more platforms coming to market or being built. I think part of it is there seems to be a proliferation of, as we were talking earlier, kind of that sub $1 billion AUM, kind of 500 million to 250 million under management sized private equity group or investment group, maybe more broadly labeled. I think the rise of the independent sponsor is also very important to talk about in this conversation. And I also think that we've reached a point in the cycle, particularly with these types of businesses, where you have this class of founder and CEO that let's kind of start in the early 2000s with Google and PPC and the proliferation of all of that technology that was developed that built these businesses to a point where they were able to exit very successfully, and now are sitting on personal capital that they've got optionality in their life and in their career. And a lot of them have turned back to wanting to support other founders and other agencies in the space to build and grow beyond what they could do on their own. And that is spawning, I think, quite a few number more platforms that are also a bit more sophisticated this go around, because they have the benefit of some experience from support of others that have done it prior.
Operating from first principles, this is how I think about, whether we're rising or declining. We are in the perfect storm. Tons of dry powder, a very tough market for agencies, way more agencies than there are clients, and just too much fragmentation. You put all those things together, like their consolidation is desperately needed. And I think there are a number of categories we could pontificate on in another episode about where that consolidation should occur. But I feel pretty bullish that at a minimum, platform activity is going to continue at least for the next couple of years while we ride out the uncertainty of the current economic environment, which from one day to the next, we don't know what it is. All that capital being available and it's really easy to raise $250 to $300 million right now. It's not hard at all.
Yeah. And I think so platforms beget add-ons as well. So just speaking about activity in the space broadly, I would expect we're going to all remain quite busy, because you build a platform, you launch a platform, there's a playbook, there's a plan, there's a strategy, and there are things that you're going to go look to find, acquire, and add. And so the full cycle of this fragmentation in the market, I think, is going to continue to be quite busy and really robust.
To wrap that, for the founders that are listening that are at the platform and that could be the add-on, follow what's happening, right? See who's being acquired, see who they're being acquired by, right? And then that becomes your roadmap to get to the place that you want to be, if you want to be that add-on.
Totally.
We've come full circle.
Yeah. I don't think the term add-on, I don't think it needs to be, I think sometimes people hear that and they think, oh, I don't want to be this, this add-on. I don't want to be falling into somebody else's vision. I think sometimes it catches a negative connotation, and I don't really think that has to be the case or has to be true. I think it's all about alignment again, and sometimes that starts with your own personal goals as a founder. I think a lot of times it makes a lot of sense to join something that's growing and aligns with your vision. M&A is all about going faster. I think that is how I think about it as well. So you're running a business that is it's really good at something specific, something niche, and it fits really well into a platform that doesn't do what you do. You have a real opportunity to step in with your team, your process, and what you've built to add serious muscle to that platform and give your team access to a much larger organization where there'll be career mobility, there'll be growth, there'll be opportunities for those people to run larger teams that maybe they wouldn't get that opportunity to do if you stayed independent. And so I really do think there is this symbiotic opportunity in the market. You just have to find the right fit. And I think that is the bottom line. And that is what I spend all of my time trying to do.
I think that's a great place to land. This is a really incredible conversation, Anthony. Thank you for spending so much time with us. For all our listeners, I hope you enjoyed this conversation. If you did, please do like, subscribe, share with your friends. For Ayelet and myself, thank you for joining us for another episode of Inorganic. We'll see you on the next go round.
See ya.
Thank you, guys.
Cheers.